Ladies and gentlemen, good day and welcome to ABB India Limited Q1 CY 2022 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Please note that unauthorized recording of this call is strictly prohibited. The recording will be made available on the company's and SEBI's website subsequently. I now hand the conference over to Mr. T.K. Sridhar, Chief Financial Officer of ABB India Limited. Thank you, and over to you, sir.
Thank you, Faisal. Very good afternoon to all of you. So to the Q1 2022 analyst call, where we'll definitely discuss about performance and the overall initiatives what the company is taking. So I have with me on the call Mr. Sanjeev Sharma, I'm Managing Director of ABB India Limited. Alongside with me, I also have Sanjeev Arora, who is the President for Motion Business in India. And then on the call, I have G. Balaji, the Process Automation Division Lead. So Subrata Karmarkar, who's the robotics, and Kiran Dutt, who leads the EL business, right? So are not able to join this call because of their customer engagement. So, but we will be able to handle any queries with respect to their business within ourselves, right? So thank you very much. Now I'll now hand over the call to Sanjeev to take us through what happened in Q1, and later on with the financial results is what I would explain a bit more. Right? Over to you, Sanjeev.
Thank you, Sridhar. Good afternoon, everyone. Thanks for joining in this quarter one or the first quarter of this year call. I'm quite pleased to report the numbers as well as the developments that took place around ABB. We also had AGM this morning. We concluded about 1 p.m. today. Very good interest from the shareholders with respect to the developments they saw in 2021, and we see that continuity in this year as well. So just to give you some highlights, so we had a strongest base order growth in our first quarter of calendar year. Orders were up 26%. Revenues were up 21%. We improved value offerings and our operational efficiencies led to double-digit PBT percentage before exceptional items. And also we went ahead and voluntarily published our Business Responsibility and Sustainability Report, BRSR 2021, as early adopters. And you will, if you had a chance to look at it, if not, please have a look at it. It will show you detailed insights into what ABB and its teams have done in the last 1.5 years. We have been taking a lot of initiatives in this area, and now we have the recognition and conclusion of those initiatives. And we really are pleased in terms of how our campuses and our locations have developed, and also how we are helping our customers to be more environmental friendly with their establishments, because our product portfolio is in the sweet spot of energy efficiency, and it's in the sweet spot as an enabler for customers to also realize benefits around their ESG agenda. We continue to maintain a solid cash position, and it continues to strengthen. When we look into the overall business construct, we have strong short cycle orders, which means also good for cash flow, because the conversion of orders to revenues to cash is quick, and that's something we continue to enjoy in our balance sheet. The market segment focus, and you may have heard me say this before, we have 20 distinct business divisions. Each one of them have their own business model, but all of them are exposed to about 23 market segments in the market. And these 23 market segments represent the strength of Indian economy and the activity. Some of the market segments are cyclical, some of them are long-term trends, and we have continued to participate there with focused channels focused OEMs, focused integrators, and also our direct efforts in the marketplace. And we continue to see penetration across geographies as well as in the market segments. We had a fine time addressing our export obligations, wherein we help our group to cater to certain markets wherein group thinks that the Indian operations can support them to support customers outside, and that saw a good traction of plus 33%. Services order, which again is a backbone of our installed base we have created over last 70 plus years of manufacturing in the country. That continues to draw the strong support from our customers in terms of maintaining reliability, availability, maintainability, and serviceability of the assets which customers have deployed. And we also are not dependent anymore on core sector, unlike 5-6 years back, wherein either the core sector was up and we were up with them, or core sector is down and we were down with them. But now we have a much more broad-based offerings across the market segments, which are not only large industries, but also medium-sized industry, and also upcoming industries like data centers, F&B, and others, and also the expansion of automotive and ancillaries in EV and other spaces. So our offerings are really broad-based, and not only we carry them ourselves, but also our partners are helping us to penetrate on the deeper side of the market. Process industries and optimization remains the theme, and we see an uptick in this area, wherein steel industry, cement industry, chemical oil and gas industry, and many other associated process industries, we see that apart from the OPEX-led investment in last years, we are seeing some solid projects forming in front of us in coming quarters. Let me put the next slide up. Yeah. So just to give you a flavor of some of the orders that we secured and supporting different segments. So I think the takeaway of this slide is how diverse our applications and the locations are. So rectifiers for natural resources is one of the major company in this area. We typically will not name the customer, unless we have pre-agreed with the customer that we can expose their name, we don't typically mention it. If any one of you have a very high interest, then we have to somehow take the approval from the customer before we can talk about it. And also tire industry expansion we are helping, and also upgradations, robotics for electronics major. And again, this is another testimony that as the electronics manufacturing expands, our robotics offering are going beyond the automotive sector. It is going into food and beverage. It is going into logistics, warehousing, and also electrification in the high-class IT campuses in Hyderabad, complete electrification around the IT campuses. They find our reliable solutions. And of course, we recently announced in the month of April a new expanded digital substation products and system factory in Baroda. It's a state-of-the-art, very well organized and very productive facility, compared with any facility you can come across globally. I think that investment is paying us well, and we have some new product lines also which are being added there. And of course, we continue to expand our LV motors, market position, and also one of the key ingredients for our expansion of market in the LV motors is continue to expand our offerings and our portfolio. So our customers and the channel partners have benefit of taking a much wider range of products from us, and that's something which goes as part of the core of Indian growth story. So these are the kind of some numbers that give you a flavor of our exports and services expansion in absolute numbers. And on the ESG framework, especially the environmental, social, and governance framework, if you see, we have adapted our group's 2030 target based on SDGs, and then we combined it with the Indian flavor of BRSR and national ESG requirement, and we have created ABB India ESG focus area. We have 10-point agenda, which you can see on the screen, right from green infrastructure to renewable energy, water conservation, material conservation, stakeholder engagement, innovation by diversity, diversity and inclusive board. And this is something you can also find very solid evidence how we do it in details in BRSR report. So I will really encourage you to look at it, and we'll be very happy to get your feedback, because this is one area we continue to engage and continue to develop. And we call it as a program as sustainability in practice. We don't talk about sustainability as a intellectual pursuit. What we talk about is that in last 1.5 years we were focused in working in certain area. Once we have achieved it, then only we talk about it. And the evidence here, you can see we have 6 locations, Nelamangala in Bangalore, Faridabad, Haryana, Pina, Bangalore, Nashik in Maharashtra, Disha building, which is our corporate office, and our business office in Bangalore, and Maneja in Gujarat. So you see, in the month of December and January, we got all these certifications, which are essentially the green certification. So Nelamangala and Faridabad has platinum certification, Pina and Nashik got gold, and Disha building, which is our corporate office, is a LEED gold certification. Well, and I think most of you are aware of it, but what it really means, platinum certification by IGBC means it's a world-class excellence facility at the campus level. Gold means it's a national excellence facility, and LEED gold means again is a national excellence facility. And underlying elements, apart from a very strict criteria of reaching this certification, we can very proudly tell to our customers, as part of their supply chain, you have a green campus which supplies you product, and it also adds to our customers' credentials, who are very increasingly ESG conscious as we go forward. And this also gives us a lot of credibility when we want to supply to new markets outside India, especially in Europe. You can talk a lot, you can make a lot of PowerPoints in terms of how good you are, but European customers are very sensitive on the green agenda. And if you have the products and solutions being developed in a green campus and facilities, and the consciousness of the management and the factory is to be very conscious about ESG agenda, you always get good credibility with the European and other customers who we are increasingly serving through our locations in the country. We have reached already in 2022 100% renewable energy in all our campuses. And this is something, if you recall my last year's presentation, it was not the case, but since we had a very focused effort, we can declare we have 100% RE100 achieved. We are working towards 100% energy productivity, and these are the targets for each location. Waste recyclability is above 90% in most locations, and we have committed to be a zero waste to landfill target, which we will achieve over a period of time. And also, we have a target for water net zero reduction target. We have been already declared as a water positive, net positive unit for Nelamangala, which is certified by TERI, index of 1.24. That means we pump in more water in the ground as a contribution to the Mother Earth relative to what we consume in it. So there are a number of techniques and technologies which we have invested, which captures water and also conserves water when we use it, and also it recycles the water around the campus. Other locations will also reach water positivity. Already the projects are being implemented. So every time we have a discussion, you will see this thing changing. Our Pina campus, where I am calling you today, we have already achieved the single-use plastic usage-free campus, and that's something we will also implement in all the locations. So that's what our sustainability in practice means. We will not talk about something which we want to do way out, but we will tell you that's the direction. But I think we will continue to share with you how we achieve it and how we continue to do it, and we would like to stay really ahead of the curve, not only at India level, even at a global level among the network of locations we have around the company. Our focus on social impact area, we have the locations where we are present, we like to make sure that there's a positive impact we create around the communities. Like for example, in Peenya. We are in an industrial area, and the infrastructure of roads, pavements, safety for women, lighting, we found that that was less than desired around the campuses, and we collaborated with police, traffic police, with BBMP, which is the municipal committee, and fire department, and we have improved the road infrastructure, and I think it is world-class road infrastructure, segregated pathways for young women and young men to walk freely, not walking and crisscrossing in the traffic, and it's very kind of a structured way for people to navigate themselves through the industrial area. We have created this as a kind of a catalytical project as an example for authorities as well as for the other industries in the area, and we are finding that other people are getting inspired to take up similar projects. Likewise, we continue to support health benefits for the communities in Peenya, Nelamangala, Vadodara, Nashik, and Faridabad, wherein our health vans go to the rural areas wherein people are wanting more support, and we continue to provide them health medical facilities. We wish we continue to expand this faster because the feedback we have is people really benefit because there are a lot of people who are not able to access the health services otherwise. We are working with Leela Poonawalla Foundation. We are running a scholarship program for 200 young women. They will be sponsored for 4 years of engineering. They come from backgrounds, either the single parents having very low income in the family, but they are meritorious students selected with a very strict criteria. And we also put a lot of efforts making sure that they are mentored through their 4 years of engineering. We also provide them internship with a certain selectivity, and also later on jobs, and also release them in the marketplace as very well developed engineers so that their income, which will really boost their family income, whether the mother or father who have raised them in a very different. So we feel very good about such programs because we feel in a small way we make a difference, and as our volumes as well as profits expand, we will continue to expand these programs further. Again, we do the National Science Day. We try to evoke STEM knowledge among the women as well as young boys so that more and more engineers are available to us. And likewise in Nelamangala, we are also upgrading a hospital which was in not so desirable position, but then I think we are doing it to a very high standard so that the communities around our locations are able to get that benefit. Same way, just to give you a business flavor, 85% of our business comes from these market segments. The green, dark green and light green are the ones which are growing at plus 15%, plus 10%, and the yellow or the orange one is sub 10%. But if you really look into the budgetary provisions, you will see that then the budgetary provisions, even the orange areas are getting boost, and there will be a cycle of investment in those areas. So I believe we are well covered with our portfolio as well as our exposure to different market segments, and we continue to deepen our engagement with the customers underlying these segments. Now it is time for financial highlights, and I hand it over to our CFO, Mr. K. Sridhar. Over to you, Sridhar.
Ram, will you run the slides?
Yeah.
So thank you very much, Santu, for giving an overview of what's happening on topics which are non-finance. So now we come to really a hardcore of how we have performed in Q1. First of all, I think this quarter again was an very credible and solid performance on ground. Right. So if I want to talk about orders, which is 2,300 crores roughly, the orders. This is sort of a larger, a quarter which has probably given the highest of the orders, right? And why I say so? Because it's all coming from base orders, right? Even when we compare with Q4 21, we have a base order of 1936, and this is fully made up of base orders. So that means this is a clear indication of the customer connect and our penetration in the tier 2, tier 3 cities are really working, and the underlying demand situation is reviving. This is just to take a clue from what Sanjeev was saying about the yellow areas which were a bit sluggish, that have started to look at investments in there area of expansions as well. So all the divisions across ABB, right? So we have 20 divisions working in present in India. So all of them have sort of posted the growth, right? So this is something which is for the first time I have seen in the first quarter coming up with this particular numbers. And the revenues has also grown up by 21%. That's what you see compared to the previous year, right? And but whereas compared to the previous quarter, which is sequentially, we have slightly low by 4% negative, by 6% negative, and I think that's more from the point of view of how the scheduling is done for execution. And when it comes to profit before tax, I think we look at what is profit before exceptional items. That is pretty much very key because that is what is going to be consistent, and that's where our focus needs to be. While the exceptional items will take care of one-off topics which has to be dealt in under more for strategic elements. So I think this is something which is reflected in the better profitability is reflecting the fact that capacity utilization is throwing up the positive numbers, and also we did have some challenges in the market in terms of commodity price increases and sometimes in terms of forex as well. So I think what the business has done is about to pass on this particular impact to the market. So because as you know, we we have very less of orders which are probably have an variation clause because we don't have projects. We are more in the short cycle businesses, and that is something what we have to necessarily pass on this commodity impact and the impact of the business, and that's what we have, as the business has done to remain profitable. So the next is about order backlog. Order backlog, we have a solid order backlog of 5,230 crores, and that's something which we see will be executable in the coming quarters. And and we have sort of arranged ourselves to deliver them on time without any disruptions which is within our control. So cash collections remain steady. So our DSOs have reduced compared to Q4 2021. So that's something what we have also continued to focus. What we have increased is around the inventories. So inventories have increased in the company because that's more with respect to sourcing what has been done to stock the material to meet the supply disruption challenges, as well as to meet the execution timeline for the backlog, which has already gone up. So this is in other words, this is a very conscious buying which has been done by the unit to avoid any future surprises. So what could be the focus areas, I think, going forward? So I think definitely, I think we expect that there could be headwinds of supply chain disruptions, and we have to gear up for that. And some parts of geopolitical impact, which we should also expect to continue. So while we do this, our focus on working capital, because cash is very important when the growth is when you're seeing the growth, we need to cash to fuel the growth. So that's something what we will conserve and we will build upon it. And we also expect there could be certain definitely increases in expenses like freight, like traveling, etc., because the market is opening up, and also the freight is something which is also is a player in the market with respect to the availability of logistics constraints and the fuel prices. So the exceptional items, I think, as we had mentioned, we executed the sale of turbocharger business, the fully owned subsidiary. So that's something what we did. That 293 crores is the exceptional item what has been reported, and we also accrued the tax on it and the capital gains at the 23%. So that's reflected in the PAT percentage. Next slide. Yeah. So this is where we stand with respect to how our P&L analysis looks like for the various elements in that. Right. So material cost is remaining consistent at 65.8, 66%, and as I told you, this is I would say contributed by three major factors. One, of course, the mix, right, which is definitely a key fact because both exports and services have better than the previous quarter. So that is something which is important for us to know. And also, as we said, we did a price increase for the price in the market, and so that's also an important element. And also, after we had certain issues in process automation earlier with respect to aggressive projects, with the improvement in the processes, right, I think their profitability is absolutely pretty much very strong without any surprises, and top-class execution of projects is what we see, and that's held the material costs at steady levels. Coming to personal expense, a slight increase compared to the previous quarter at the same time, and that's more because there is an impact of annual increments which comes in, and also a good news because we performed extraordinarily well in 2021. The employees had got their bonuses, which was absolutely full bonuses, and in some businesses slightly more because they had outperformed the targets and they had done well. So it's good, and that's important for us to retain the employees and engage with them so that we have and continued support from them in the delivery of numbers. Right, and other expenses, as you see, I think it is definitely increased for the right reasons. One, as I told you, is about the volume-related expenses, which is on the freight and topics like which is related to revenue, royalties, and all these things are increased more driven by revenue. So we are keeping a tight control on the fixed expenses, which is very important, which does not blow out because we're increasing in revenue. So that's something which is as an internal control topic which we hold the businesses responsible. So I think this is by and large, and the good to see compared to the previous quarter same time and this thing. So we have a lesser positive impact of commodity variation. So of the exchange variation as what we say, but instead of it we did an 10.1% in PBT. So as I said, as we said in the last calls and the previous calls as well, we would like to maintain a credible first level of profitability at PBT level, right, of having double-digit quarter-on-quarter and year-on-year, and then that should sort of translate with the volumes what we tend to believe that will improve, right, should translate into better profitability going forward, right. So all the elements of cost is something under purview everywhere. Yeah, this is about, yeah. So now we do a bit of a quick dive into how does the segment-wise numbers look like, right? So electrification, again, I think I would say to be on a very lighter side. We actually promote healthy internal competition. So we have motion and electrification as two businesses which comprise almost 75% of ABB India's turnover, are well positioned to compete within themselves to be leaders, market leaders. So we could see today electrification is sort of now growing robustly at this point of time. So we see a good order growth, which is absolutely across all channels and segments which I have seen. Revenues, I think, because it's a short cycle business, so orders have to be converted to revenues, and so that they reflected in the revenue growth. And profitability better because I think when the revenue kicks in, they are the best people to get, because of being a product business, they get the full advantage to the bottom line, and also they did a bit of a price increase. So when we come to the next slide, which is the motion. So again, a very strong performance. I think motion has been, as I said, there's a jewel in the crown of ABB in India. So they are consistent performers when it comes to performing in the market as well as in the profitability. So they have a solid backlog, so that should be converted to revenue in the coming quarters. And I think they also have a good contribution of the channels, and probably they are leading on the export side of it. So they have got various allocations to various other markets compared to the previous year. So that's something which is growing, with especially the large motors business, right? So and revenues, of course, I think it's a fallout of a better order what we have, and profitability better than previous years, more fueled by mix and improved price realization. Process automation. I think process automation, as we all should know, right? So this is in project businesses, projects, and that is dependent on the decision what the customer would do and the timing. So they did, but their base volumes were pretty strong. 460 crores is definitely higher. If I look at 770 crores, that had an element of 350 crores of a large order, and if you remove that, so they have actually maintained the base orders and a good, healthy sort of an service and then order mix that they have taken. So on revenues, I think they would definitely scale up the revenues going forward because they have a backlog which will execute, and that's more in line with the project schedule which would fall in place. Robotics again, they did a kick up in this particular quarter again. So they did get some good orders in the market, and we believe that this is a small and sweet business which will keep growing fast, right? And that's something which we are watching out how this would pan out going forward. So, but in terms of capacities, I would say that we are now working in quite a few plants at double shifts. Right, so as and when we move into higher trajectory of growth in the growth percentages, so we have headroom to move into the third shift as well. Yeah, this is something on channels. I think we already discussed it. We could go ahead on this. Yeah, so outlook and priority. This is the last slide. I think very important. We have an absolute flawless execution of our order backlog. That is pretty much the very important stuff, so that we have the conversions to the bottom line and the top line happening correctly. And we will definitely look at headwinds on demand supply chain imbalances, right? So that will, especially when it comes to electronics and semiconductor related components, what we get in. So that's something which we are aware of on the ground, and we are preparing ourselves to handle it both with the customers as well as internal production line. And we will also see elevated commodity prices and volatility. So this is something what we will look at it. And what I did not add into this is the impact of interest costs and the corresponding inflation with the RBI coming up with this. So that's something which we have not added to this. That we will see, but I think we will also keep and watch. So having these sort of sensitivities, we will definitely make sure that we leverage the positive momentum which has been created in the market and internally also in the production facilities. We will consolidate our cash position, right? And of course, last but not the least, I think without this we cannot survive. So as Sandeep always says, customer is the only person who gives us the income. So we will enhance our engagement with them. So this is the last slide, and I think we probably now open it up for Q&A. Yeah. So who is moderating? Faisal. So would you open it up for Q&A?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. First question is from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi, good afternoon, team, and congratulations for the strong performance. My first question is on the sharp commodity inflation that we have seen over the past 2 months. Though it started to taper off, but do you perceive any impact of this steep inflation both on near-term margins, on the short cycle orders that we have in the backlog, as well as do you foresee any risk to demand, either in terms of delays or postponement of orders in the near term? That's the first question.
Thank you, Renu. Thanks for the question. Well, I think it is true that the inflationary pressures are being felt across the globe, and also the supply chain disruptions. We are equally aware, and also our customers are equally aware, and both sides are equally sensitive to it. So whenever you have such a situation and you are not uniquely participant in an inflation of input costs as a company, then what happens is that distribution of that cost is much easier to the customer base. Because customer understand where we are coming from and there's a less resistance. And since there are supply chains which are squeezed in the marketplace, customers are also very receptive to receive that pass on cost from us. So, but at the same time, we keep our integrity of our contracts with the customers. If we have committed somewhere wherein the customer has certain price lock-in with us, we honor that commitment, we deliver to them. But at the same time, when we see that there is an input cost increase from us, we also adjust our prices towards the customer. Luckily for us, the way our portfolio construct is today, we have very fast-moving products. So the cyclicity of our, the order to delivery is quite low, and that allows us to adjust the price base for us whenever we see input cost variation. So at this point of time, yes, it's a stressful area. Sometimes it is about demand is very strong, so sometimes it is about securing the supplies. I think that's where our attention goes. But whenever there's untenable that we should not keep that cost inside our books, we have customers who are very supportive at this point of time. In medium short term, on the elasticity of the interest rates on demand and elasticity of the cost input on the demand, I think time will tell. Right now, in fact, we can't explain the strength of the demand. In fact, it's the other way around. The markets are very, very strong at this point of time in the multiple market segments, and that we also see in the inquiry built up. We have not seen immediate impact on demand reduction, but we never know what happens 6 months down the line. If the Fed in US continues to increase the interest rate and the RBI follows, obviously, when the credit supply gets squeezed in the market, there is always certain corners of the market who are very interest rate sensitive, or the investments which are interest rate sensitive, they get a little bit more impacted. So we will wait and watch, but till that time, we continue to serve the customers who are demanding and connected with us.
Sure. So hopefully the double-digit PBT margin should not have any headwinds in the near term.
Well, Renu, I'm with you.
Sure. The second question that I have is that Sridhar has been emphasizing that cash is the focus and that is where everything is driving. So again, it's a repeat like every quarter. What do we plan to, how do we plan to use this 2,700 crores cash on books? Any related updates on new products or factories? We read about the new smart meter factory being set up at Nashik. So if you can give some more inputs or insights, that would be helpful.
So we are continuously investing. We are continuously expanding. And post-COVID, we know that we are already, Sridhar mentioned, and also Sanjeev Arora is sitting there, we are expanding our shifts. So that means we are already hitting this top ceiling of our capacity. So it means there will be an organic growth in our capacity expansion, which is already in play in different locations for different product lines. And also we have inorganic opportunities, exposure globally, wherein our global teams are evaluating some global opportunities. And if they get materialized, so that means they will have a local footprint, which we will have to integrate, and that's where we fund it with our own accruals. So both for organic and inorganic, there are things in play, and we hope that's where we will be able to use our cash meaningfully in the volatile markets we have. But at the same time, we continue to consolidate our portfolio and market position. But at the same time, Renu, it doesn't hurt. It really feels good to have some cash in hand.
Not true, but anything to quantify in terms of capex that we plan on the next 2 years?
I do have it, and there are some announcements we will make sometime in October. And whether you see our BRSR report or Sustainability in Practice report, we talk about it when we are ready and we have completed, because otherwise, we are kind of putting a speculation matter in market. And what we have is you will see some announcements from us, but I don't want to hint it at this time because it's a bit sensitive for the market.
Thank you, Ms. Bed. May we request that you return to the question queue for follow-up questions?
Certainly.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Ankur Sharma from HDFC Standard Life Insurance. Please go ahead.
Yeah. Hi, sir. Good afternoon. Congrats on the great numbers. Firstly, when I look at your order inflows, up 26% YOY, I'm just trying to understand how much of that is, driven by, the price hikes or price increases that you have taken, and how much is actually the volume increase. So if you could help us understand what has been the kind of price hikes you may have taken last couple of quarters, and if you exclude that, then, what kind of order inflow growth, it would look like.
I think it's a good question. So what we will do is, we will have to do a bit of analysis there. Definitely, as the inflation expands and the price expands, there is a definite effect of it. But I would say it's a mix of solid demand plus the price expansion. But let me give you a bit of a flavor with Sanjeev Arora, who runs our motion business. So maybe one of the businesses he can pick up so that he gives a bit of a kind of a micro snapshot of a business so that it gives you a flavor.
So thank you, Sanjeev, and thank you, Ankur, for the question. So as in the earlier question, you must have heard that how the raw material prices are hurting. But then when the demand is there, you can obviously, it's a bit easy to pass on to the customers. Of course, it hurts, but then we have to do that. So I would say that, giving a ballpark number, 18 to 20% of the price increase, if we compare last Q1 to this Q1, it would be on the price increases, roughly. And then balance, of course, the natural growth of, in motion business, say around 8 to 10%.
Perfect. Okay. And any more hikes planned, sir? Or are you largely done? Hello?
This is the operator.
Yeah, I can hear you.
One moment, sir. Ladies and gentlemen, the line for the management has got disconnected. Request you all to please stay online while we reconnect. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Thank you, and over to you.
So Sanjeev Arora continues to explain. He was at a point wherein he said 18% is about the price increase. Balance comes from demand. You would like to elaborate, Sanjeev?
Yes. So first of all, sorry for the disconnect of the line, but then when while I continue my last sentence, so roughly about 18 to 20% is on the price increases, and balance the natural growth and the way we are penetrating into the various geographical segments. Exports is growing. We are in tier 2, tier 3, even I would say in the nascent stages of entering into new businesses also, like having new products, like what Sanjeev showed about flame-proof motors. So I think these all put together has given us both the growth momentum from the market standpoint as well as the price increases. So the combined effect has been quite good for us. So I hope I was able to answer your question, Ankur.
Thanks, Mr. Arora. And if I may just follow up on the export side, I think on one of the slides it was specifically mentioned that exports doing pretty well on the motors business. If you could help us, how much is exports today of the total motors business? Any new markets, products? What's really happening there? What's driving this growth for us? Thanks. Yeah, that's also my side.
So I think it is good to know that what is driving this. And the way we are operating in our factories, the on-time deliveries, the quality, and the technology, what we have in India is driving this growth. And the story has just begun and it will continue. As far as the numbers, I would say that we have a very good growth. That is the statement what I can make, because I cannot say much beyond this, but I can assure you that this is just a beginning.
So just to complement what Sanjeev Arora said, So we have export growth. So we did mention plus 33% expansion. And also we have, given our operations are world class. So we have more and more markets being allocated to us as far as North America, South America, and other locations. So our products are flowing in all the directions. So that's what the effect comes when the global allocation comes to a factory. Expansion comes beyond the domestic market. So it has really an exponential effect. So that exponential effect is built into our export performance. So that's what happens with other product lines also. We are exporting more than motors. So as the geopolitical things as well as other things play out, as and when our global team members become comfortable that India can serve certain key markets, then we always see an exponential effect in those product lines. And luckily, we have created a lot of local supply chains, and we are very competitive in the domestic market. And when we are competitive in a domestic market which is so price sensitive, then competing outside is a leverage.
Sure. Great. Thanks, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Good afternoon, everyone, and thanks for the opportunity. And congratulations to the entire team for fantastic results. The first question that I had was more on margins. At this point of time, you are at double-digit PBT margins. Could you give us some color on the journey towards double-digit PAT margins that you may want to kind of think through?
Okay, so I would again repeat what I said last time, right? So this question is, of course, comes every quarter. I think the first step which we had to reach is to post a credible double-digit margin at the PBT level year on year, right? So we first started to reach that in Q4 of 21, right? And this, what I mean is without exceptional items, because exceptional items is something which we don't consider it as it's a one-time topic. So that's something which we would like to stabilize. So when we embark on this particular journey, so there are definitely a lot of headwinds in respect to various topics which come. So we need to manage that as well and continue to post that 10% of double-digit margin on the PBT level. Yes, our vision is to make sure that in the medium term we are there at the bottom, at the PAT of double digits. So that's important for us as a target to achieve, right? So but we need first to do this 10% of PBT level year on year. So I think we need to wait for the first year of 10% PBT on a holistic level that we do without exceptional items, and then we immediately shift our gear. How do we improve from there to translate it into the PAT level, right? Hopefully, I think we also expect some relaxations from the government as well in terms of corporate tax reduction that could also help us.
Noted. Thanks for the response. The second question that I had was on newer areas from where you're getting orders, specifically, let's say, energy efficiency. I wanted to get a sense from you whether numbers are becoming impactful for you already, what kind of response you're getting from customers, and if you could give some more sense on whether the opportunity size is higher on the industrial side or on the commercial building side. Thank you.
So I think my colleagues will also help me here. So what happens is that one thing you should know, and I can say it by experience and my colleagues also experience it, fundamentally the market and the market participants' mindset is changing. Earlier everybody was looking for a cheap and chalta hai product, but now everybody is looking for the best in quality product. I think there's quite a marked shift on the quality and the technology side of acquisition by our customers. And our exposure of our portfolio is more on the industrial customers than on the government customers. But in the government, again, we have railways and metros, and they are buying best in quality and best in class components because of their fast trains as well as metro things. Because there's no compromise on those qualities, and they're looking for more and more public infrastructure opportunities. So, but largely industry again, digitalization, energy efficiency, they are becoming a very thoughtful and very conscious aspirations with every acquisition customers are making, and that's where our portfolio falls in a very sweet spot. Be it in buildings, whether it's a residential building, people are doing automation of their homes. Be it in the offices, people are doing automation of their homes. Like the building we are sitting here and talking to you, it's our own building. We are using 5,000 ABB products, out of which 500 are connected products, digital products, and it reduces the energy footprint of our building by 35%. And it is being documented by our building management system. And as we say, in 2030, the 70% of the buildings that will exist, they don't exist right now. They will be yet to be constructed. And this movement is going in that direction, whether it is hotels. And smarter thing is that it is not the multinational or the global company. It is the domestic customers, domestic corporates who are consciously buying the energy efficiency portfolio. Number one, with that consciousness, they save money. Like say, you saw my slide about RE100. Of course, it's a good credential that we are buying green energy, but it saves me 30% energy cost. And that consciousness and awareness is coming into the customers. Making smart decisions about energy efficiency is more productivity for their people. So that's the kind of a trend we are seeing in the marketplace, and we are seeing a marked shift in the attitudes and the acquisition behavior of our customers.
Thank you, Sanjeev. Those are my questions, and all the very best. Thank you.
Thank you very much.
Thank you. The next question is from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Yeah. Hello, sir. Thanks for the opportunity. Sir, my first question is regarding the inquiry pipeline. You have talked about that the inquiry pipeline remains strong. So if you can touch upon, any key segments where you are seeing this, pipeline to be strong, or, quantification in terms of how large is this pipeline or how it would have grown, over the last couple of quarters. That's my first question, sir.
Thank you, Charanjit. So, you saw the segment picture I showed you. When you saw a high green and slightly less green and yellow, that represents our so-called view of market formation. So that's what we say. The dark green means plus 15% growth in the inquiry base. Then when we talk about light green, it is plus 10% market growth. And then we look into the yellow one, it is say 8, 9, 7%. So that correspondingly, we get to see the inquiry build up there. And what we are saying is that the yellow one, which is basically the core sector, there the so-called, the next cycle of capex has to start. And we have started seeing the kind of a preparation by the large corporates in the steel, cement, and many other core sectors. And that will play out as we go forward. But in terms of quantifying, I believe we know it. We use some digital tools where every salesperson who's operating in the market, he knows his inquiry base. And all what we do is we also monitor how much conversion we are doing it out of that base. And that's where most of our efforts go. And so far, given plus 26% growth, you know that our conversion rate is good. But in my view, it can be better.
Thanks, Ajit, for that detailed answer. My other question is, if I look at this channel mix, so distributors have become 34% in our overall channel mix, and our nature of the products is also more short cycle. We talked about, expanding into tier 2, tier 3 markets. So if you can touch upon, this entire channel expansion and industrial products company, looking at more of channel-driven sales. Also, looking at tier 2, tier 3 markets. So how is this entire, business prospect changing, and how does this, distribution channel mix look like maybe going forward for ABB India?
So I'll answer it partly, and then I'll invite Sanjeev's comment because he's a master in this area. So as far as we are concerned, we are producing products in the company. So when we call it products, so you understand there are 3 types of products. One is called you have the manufacture to stores, MTS products, wherein you produce it, put it into a box, you get an order, and it gets shipped out. Then there's an MTO product, which is called made to order, wherein the same product, which is MTS, you put a relay or some kind of add-on accessories, and then it gets shipped out. And then you have ETO product, which is engineer to order. We use our products, but you put them into a subsystem and then you ship out, because that's the next level of value add. Now, these kind of products, when you have, what happens is there is already a defined use by the channels, panel builders, integrators, who are serving their customers in their proximity. And that's the muscle of ABB, that not only our salespeople, our engineers, but we have a huge battery of people who are earning their bread and butter every day and every morning and expanding the wealth of their families using our product and our portfolio. And they are very loyal to us, and we continue to train them and continue to empower them to do more business in Tier 1. And since the GDP growth is going into Tier 2, Tier 3, it's a very natural flow us to expand there. And then what happens is, since our production lines are same, more you sell in the marketplace, more pull it creates for the products from our shelves, and then the magic happens, because you hit the break-even points, and after the break-even point, EBITDA is a natural effect in terms of traction of it, and this is a very fantastic business relative to a very project-heavy business, which is top line interesting, but then it takes a lot of time to convert profits and convert cash out of it. So again, this kind of business again converts orders into cash very quickly, and also it's very elastic. If your ability to serve and technology is good and perception is good, then you get a multiplier effect very quickly. Sanjeev, you want to add on top of it?
I think, Sanjeev, you have said it all, but as the word says, so partner is important in that. So they are our partners, and it becomes our moral responsibility also to groom them to that level, that how we impart our technical trainings, how we impart them all sorts of factory know-how, how we produce motors, what are the USPs or drives or switchgear. So all the products what we talk about today are quite, and then on top of it, how we are actually managing our Tier 2, Tier 3 cities, which are our white spots where we require, and how we continuously add the channel partners and also engage in monitoring their performance and supporting them to add new product portfolios of ABB. And I can say, humbly speaking, ABB is one company where if a channel partner is there, he can sell anything in ABB's portfolio, and then he grows as a natural growth also. So I think it's a win-win situation, and you will see more, I would say, force into this in coming times.
So just to give you a breakdown, we are about 70% in MTO, MTS, and ETO space, 20% in service, and about 10% in project business. But this project business will expand when the capex in the large heavy industry comes. But I really like this portfolio because elasticity of it is to the market demand is very good.
Thanks, Sanjeev, for taking my questions. That was very helpful. Thank you.
Last question.
Thank you. The next question is from the line of Sandeep Tulsiyan from JM Financial. Please go ahead.
Yeah, very good evening. Thank you for taking the question. First, I would like to harp on the point of margins. When we compare the numbers on a year-on-year basis, we see that the exports and services have grown much slower at 3% versus the overall sales growth of 20%. As well as we see the direct sales to customers is lower versus 34% of sales is down to 32%. But despite that, we have improved our overall margins as well as gross margins. So if you could highlight few points, what is driving this margin expansion in the current quarter? And going forward, as your mix improves, given the strong inflows on exports and services, how should we look at the margins panning out, say, over the next 4 to 8 quarters?
Yeah, so let me take this question, Sanjeev, right? So I think first of all, I think a margin is sort of a product of various elements into that, right? So first you have the volume impact, then the mix impact of the businesses, what we deliver, right? And also we have the impact of what is the sort of the SCM, the supply chain efficiencies with which we operate. So I think, do we have this particular track within the company? Answer to that is yes, right? Can we sort of, share it with you? Answer to that is no, because that's something which is sensitive for the market and it affects the competitiveness of any organization for that matter. So Now how do we drive this is very important. Is every business definitely has a KPI that they have to be strong enough in the top line and the bottom line as well. So the business leaders drive this particular agenda in terms of how they maintain the market leadership with the right mix and leveraging on their capacities, built up capacities at minimum cost, right? As what Sanjeev was mentioning, while we are definitely looking at ESG as a topic which is supposed to be not only a compliance topic, but also a business enabler for the reason because it helps us to showcase these particular topics to the customers to get more businesses from the quality of customers, which improve, with better pricing, and B, it also helps us reduce the cost on the other side, right? So our energy cost comes down, our water consumption comes down, our waste management control comes down. So those particular expenses which normally are not seen with the common eyes comes down, and that also impacts our competitiveness in a positive way. So now coming to the trajectory as to how do you want to see it, as I mentioned, so our first goal, right, is to make sure that we remain credible on delivering that double-digit profitability at PBT level without any exceptional items. That is something which is foremost and most critical for us this year. And we do not want to get disturbed about look at how is it translates to PAT in immediate future, because that's something because we are in the next 2 years, we do foresee certain headwinds and risk as what you see. For example, when the geopolitical stuff was not visible 1 quarter before, right? So, but we sort of came and badly got impacted with that because our exports which are there or the global outputs could be impacted like that. So that was just an example. So that being the case, our first thing is to do double digit in the medium term. Definitely work with the other levers to make sure that we are going to go there to 10% PAT.
Thank you. Second question is on the employee strength. What we see from the annual report is increased significantly in the last 1 year. Broadly, our employee expenses were in that 575 crore ballpark number for the past couple of years. And we have also paid out some variable bonuses in the current quarter. So going forward, how should we look at the overall employee strength, since you mentioned you'll be utilizing cash to expand capacities? Should it increase at a much faster pace than what is the trajectory that we have seen in the past 3-4 years? Or this is more like a one-time build-up and we shouldn't see a similar proportionate increase in future? And since this is the last question, just want to squeeze in over there. Given a parent company has mentioned the listing of e-mobility division will be completed in the current quarter, what will be its likely impact on the Indian business? That's it.
Okay. The first one is about the employee strength, right? So first of all, I think in today's market, right, so employee is one of the very key factors with the backlog which we have, or any company has it. We need to make sure that the employees are retained. So that's something which we want to do. So while attrition is good, but attrition beyond an extent is something which will hamper our deliverables to the customer. So that's something which we do not want to do. And typically, when it comes to digital and automation skills, right, that's something which is very sought after skill in the market, and that's something which we want to retain. So the annual increases will continue year on year, but we are only trying to make sure that our personal expenses is within the range of 8 to 9% of our sales, which is what has been our trend, is what we would like to maintain, right? And while we do this, I think there are certain great initiatives by the business leaders in terms of automating and robotizing some of their operations on the shop floor, so that they're able to be flexible with their capacities in terms of how they could manage with less people and more automation. So that's also something which all and the business leaders are working on. So that's important for us to be agile. So long answer short is we will have employee costs between 8 to 9%. digital and the automation skill sets are pretty important for us to fuel the next set of growth which will happen, right? And the capacities will be managed with balancing between automation and headcount.
Understood. And on the e-mobility part, please.
And the e-mobility part of it is a global initiative, so we have nothing to do with it in India at this point of time.
Sure. All right. Thank you so much.
Thank you.
So probably one more question.
We'll take the next question from the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Yeah.
Hi, sir. Good afternoon. Congrats on a good set of numbers. My question is with respect to the good growth that we have seen with respect to the electrification products. If you can break that growth up into what kind of price increase was it, how much of it was led by distribution reach increase and growth across different low voltage and medium voltage products, if you can give that thought process.
Okay.
Could you repeat your question?
Ian, how did the growth come? How much was it basically like motion,
Right.
also on pricing, right? And how much was it really because of the customer connect and the growth?
So I would say it's safe to assume. I think it's a similar pattern than MO. So I would say, I don't have Kiran right now. He was engaged somewhere else. He would have given you more precise numbers. But I think it's safe to assume what Sanjeev Arora replied earlier for the motion business.
Got it, sir. And the growth in the process automation business has been on the softer side. The run rate is still, in terms of orders, it's more like 400, 450 crores. Last quarter was kind of more like an exception. While the other two last segments have grown consistently, whereas this segment has been on the softer side. Any particular reason behind that?
Yes. So Ravi, it's like this, right? Process automation has got two major businesses, which is energy management divisions. Another one is the process industries, which caters to cement and mining and steel sector and this thing. So as Sanjeev was saying, those customers lie in the 7 to 8% growth sectors, which is a core sector, right? So naturally their growth will not be as exciting as what EL and MO is posting at this point of time. And they're also project business, which is more cyclical and depending on the capex thing. So that will definitely, you need to look at PA. If you want to look at it, we need to look at a 3-year rolling average or 4-quarter rolling average, and that gives you more sort of a color rather than looking at quarter to quarter.
So got it, sir. And my last question is with respect to the slide 13 that you had mentioned, high, moderate, low. Each of these categories, if you can give the breakup of contribution to your overall revenue. So basically, how much would be the revenue contribution from the high growth segment, from the moderate and the medium growth segment?
Right. So Ravi, that's a very good question. I'm also very interested to know that. But we have 20 divisions operating in 23 market segments. We do that analysis, but I think we are not in a position to immediately share it with you.
Got it, sir. Thanks.
Thank you. Take one. The next question is from the line of Amit Mahawar from Edelweiss. Please go ahead.
Thank you. Sir, I just have two quick questions. First is, if you see the EP division, electrification product division, the growth has been pretty strong, more than 30% vis-a-vis last 2 to 3 year average. Is it right to say that this segment is where we've seen the maximum addition in mandates, both globally and in domestic market, the addressable market expansion? And can we see the profitability scale up in this segment in line with that in terms of potential?
So I would say we have 4 engines, and I think since you are the market president, you also, I'm sure, analyze the securities for all the companies. So I like our portfolio because it has different aspects of it, but motion and EL, I would say they are part of our growth portfolio. PA is more cyclic because the capex needs to come in. And again, as far as the robotics is concerned, it's really a high growth segment for us, right? So that's how it is. So I would say in terms of global mandate, EL and MO has a very strong kind of a global mandate because they already have a very good footprint in the country, high localization, and also very good market shares in the right market segments for us. So that's anyway has a very good flow, not only for domestic, but also increasingly for the export market. When it comes to robotics, I think you may have heard me before. Globally, similar markets use 120 robots for 10,000 workers. We use 6 robots per 10,000 workers. So you can see it's a no-brainer that market continues to grow at a faster rate, and that we enjoy. Process automation actually is a system business, but it integrates a lot of MO and EL products, part of their portfolio, apart from control system. So whenever the capex gets picked up, that cyclicity again gives us the benefit as we go forward. Other than they have very strong service business on our install base, and that again we continue to grow as the more opening takes place and more demand of service on the OPEX side comes on the PA side. But that's the kind of one. So I would say we have a fairly strong mandate from globally for all the divisions at this point of time. But yes, it is true, robotics is smallest, but at the same time, we have put it into a long play for us. Yeah.
Okay. Rajiv, maybe one question for Sridhar. If I can get in Q1, what was the forex gain? In Q1 vis-a-vis last year Q1. Thank you.
So should I do like this, Amit? So it's a bit of a more minute detail. I would send you a note. Is that okay?
Thank you, Sridhar. Good luck.
Thank you. Good luck. Thank you very much. So, yeah, I think we are at 15 minutes after 4 o'clock. So probably it's time to close the call. And so thank you everyone for attending this particular call, and also the efforts gone in preparation for this, and also the management team which took out their time to attend to this call. Pretty interesting. We really enjoyed the call, and we're also excited with our journey on the ESG stuff, which is not just ESG, but is an enabler for the business, sustainability in practice. So with these words, so we look forward to soon, right, in this year at least, try to have a face-to-face meeting with all analysts sometime in the right time, right? So you could probably decide so that the analysts are also taken care of. Thank you very much for attending, and looking forward to talk to you the next quarter. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of ABB India Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.